Hey, welcome back. I just want to dedicate this episode on two approaches or two types of use cases depending on where you are in the world in terms of the sovereign adoption of Bitcoin. As you recall, in my channel, I've posted a few videos to do with the major theme or the major catalyst that I expect for Bitcoin coming into next year, 2025, is a theme around the reign of the sovereign state adoption of Bitcoin. And this really plays beautifully when Trump eventually swears his oath into office January 20th next year. That's where the game is going to begin in terms of who can usher in very quickly the strategic Bitcoin reserve legislation in the various territories around the world. And also looking into the other side of the coin is once you've adopted that is the goal of which to the gold rush for acquiring and mining new Bitcoins and storing it into the strategic Bitcoin reserve at the national level in countries around the world. So on that basis, I just want to share with you one slide around Bitcoin adoption for developing nations versus Bitcoin adoption for developed nations, because I think there are two different angles depending on how they would view Bitcoin when they're adopting it from a sovereign level, because there are clearly two differences between the both. So before I jump into the differences, I want to start off with what is the shared common theme. Why we keep on advocating that sovereigns, the nation state, should start considering adopting Bitcoin as a strategic reserve in the nation state level. What's the challenge that they all face? It's to do with the habit of governments printing money. They're always printing money, and more often than they should, they keep on printing money more excessively, which leads to overinflation and currency devaluation. They see rising inflation as eroding purchasing power. But the good side with Bitcoin value proposition is it has a fixed supply cap of 21 million coins. This is the total amount that will ever be in circulation, which makes it immune to monetary debasement globally. So this is the common challenge that they face. So it's a perfect hedge against any inflationary situation around the world, whether you're from a developing nation or from a developed nation. So that's the common shared challenge that they have: currency devaluation and inflation, and Bitcoin is a solution. Now, what are the nuances that I spoke about earlier on? So let's start off with Bitcoin for developing nations. Now, I've kind of added a strapline here, a lifeline against economic instability, because I think this is the thematic for a developing nation adopting Bitcoin. They do it as out of an urgency in order to alleviate their hyperinflation situation in those countries. Now, countries in developing worlds, they do suffer with deteriorating, in fact, a much faster pace of deterioration of the local fiat currencies, like in the case of Argentina or in the case of Nigeria. Citizens can preserve their savings when national currencies collapse, adopting Bitcoin as a stable alternative. Another entry point for developed nations adopting Bitcoin, well, the case of positioning the prospect of mining Bitcoins in those territories as economic opportunity. Now, this is quite interesting because I recall vividly Samson Mao, who is the head of Jan3. He is a Bitcoin maximalist, if you like, a huge supporter and advocate for Bitcoin. He's been involved quite extensively in visiting many countries, mainly on the developing world, and recently in Germany, in Bundestag, and the rest of the developed nations. He's been advocating and helping to speak with politicians of those countries, raising the awareness of why they should be adopting Bitcoin. He has gone into depth of articulating strategies that would enable them to do just that. And he has mentioned the notion of tapping in the abundant energy resources that the developing nations usually have as an entry point. So setting up mining rigs in those territories to tap into those abundant natural resources at a cheaper cost as an incentive for mining companies to start rapidly mining new Bitcoins in those developing nations' territories. So this is an interesting nuance that the developing nation will probably have over and above with the developed nation who are thinking about doing something similar when it comes to adopting Bitcoin. They do have that advantage, and I think that's a key a key nuance that they have. And also nation-state adoption for strategic reserves. So governments in emerging markets can adopt Bitcoin as a strategic reserve asset to hedge, as I said before, against currency volatility and stabilize their economies. The early adopters, like El Salvador, that's a classic example, because they themselves have been the first to legalize Bitcoin, so they made Bitcoin as a legal tender, has indeed set a precedent for others to follow. So these are the nuances from a sovereign state level adoption of Bitcoin in the developing nations world. And I think the strapline, as I put here, is quite key. They use it more as a lifeline against economic instability. If we move on to the developed world, let's take the example of the G7 nations. Well, what is their imperative? What is their aim? Or what is their, what is the opportunity to position Bitcoin for those type of countries? Well, it's mainly as a store of value, or indeed wealth preservation and indeed wealth growth. So I live in the Western world, in Europe. I precisely use Bitcoin as a store of value rather than as a medium of exchange, rather than trading day-to-day commerce using my Bitcoin holdings. No, my focus there is to position Bitcoin, my Bitcoin holdings, as a store of value in order to preserve my current wealth that I have, maintain my purchasing power, and also increasing it in time through wealth, capital preservation and growth in the long term. So I think any Western world or G7 nation, that is their premise, that is their imperative and worry. Why? Because like with a developing nation, the fiat currencies, when we're talking about the US dollar or the euro, which is where I live, it suffers the same predicament in terms of currency debasement. As I said earlier on, governments in those countries, they still print money in order to satisfy the needs of their countries rather than imposing a hefty fine or a hefty taxation to its citizens. They print money. Even in developed nations, this is no different. Even though they hold stronger currencies in comparison to their developing nations' counterparts, they still face inflation due to excessive money printing and debt expansion. Bitcoin, as with a developing nation, offers a decentralized store of value to protect wealth in the long term. So that is the first point. Moving on to the aspect of capital preservation and growth. For investors in developing economies, Bitcoin serves as a non-correlated asset to hedge portfolios and preserve capital. What does that mean? Well, if you treat Bitcoin as a store of value, given the attributes that I've been rabbiting on about, it has a finite supply of 21 million coins. That is the ultimate attribute against any inflationary eventuality, no matter where you are in the world. And what you tend to see is, in that kind of scenario, Bitcoin has a risk-off asset. So a type of asset where you can store your wealth in advent of these times of excessive government money printing, overinflating the local economy with new money, therefore reducing the value of your savings and assets, and as a result, devaluating or debasing your currencies. This is the perfect mechanism for preserving your capital and leapfrogging your growth of your wealth into the long run. Now, looking into institutional adoption, like ETFs or corporate treasuries like MicroStrategy, which is classic examples, do signal confidence in Bitcoin as a global wealth preservation tool. And then lastly, Bitcoin as a digital gold. In developed nations or developed markets, Bitcoin competes with gold as a superior asset due to its attributes of portability. It's highly divisible more than gold, and Bitcoin is certainly more verifiable than gold. Long-term adoption is driven by its scarcity and global acceptance as digital gold. So these are the two types of scenarios or approaches where Bitcoin can be useful when you start adopting Bitcoin as a strategic reserve asset, whether it's a developing nation or for developed nations, right? Because they have two different concerns or two different priorities. And then I just want to round off with a final point around the common ground. So what is the common ground here? Bitcoin is a solution to monetary debasement, full stop. So regardless of economic status, money printing devalues savings and erodes purchasing power. Bitcoin's finite supply, on the other hand, and its decentralized nature make it a universal solution for individuals, corporations, and governments seeking monetary stability. So this is the common ground that bridges both the developing nation and the developed nation when it comes to adopting Bitcoin as a national strategic reserve asset. And then as a summary underneath, I just want to reiterate that in the case of developing nations, Bitcoin is regarded as a lifeline, helping those countries to combat against hyperinflation and leveraging their mining operations in order to mine new Bitcoins in those territories, purely because they tend to have a high abundancy of natural energy resources, which is at a much cheaper level, which makes it a unique point of entry into developing nations to set up those rigs to mine new Bitcoins and then adding those into the strategic reserve for those countries. Whereas in the case of developed nations, it is treated more as a store of value, focused on long-term wealth preservation and act as a hedge against inflation. So this is pretty much what I want to explain to you, that there are two different sets of priorities when it comes to adopting Bitcoin for developing nations on one hand and adopting Bitcoin for developed nations on the other. But between them both, I am very, very confident that this coming year, 2025, there's going to be that hefty competition between the developing nations and the developed nations when it comes to adding the Bitcoin as a strategic reserve and subsequently finding some other mechanisms to acquire as many Bitcoins as they can to hold it in their strategic reserve. So in the long run, they'll be much better positioned to be able to pay off things like their national debt or even to incentivize some important policy needs or initiatives in the countries. This is, for me, ultimately what the governments around the world ought to be concentrating. Rather than taxing their citizens left, right and centre, it would be a much better appeal politically if they were to add Bitcoin as a strategic reserve. So this is all the more reason why you should consider adding Bitcoin at a discount, because even if it's just $100,000, it's still at a discount, because for the reason I've just mentioned and for the year ahead, and the major catalyst driver, which is the sovereign's adoption of Bitcoin around the world, is going to be truly parabolic moment. But I'm very confident that we're going to be seeing those humongous candlesticks on a daily basis as we go into the 2025 and immerse ourselves in this battle of the sovereigns buying their Bitcoin. So if you enjoyed today's episode, please don't forget to hit the like button and share the video, and please subscribe to my channel, as I regularly post some interesting podcasts such as these, anything to do with Bitcoin, blockchain technology and the future of finance. So until next time,